Once again, warm welcome to all of you. This is K Asnani from Smart VRC, and today's topic is promising sectors with the fast changing economies around the world. It is becoming really very challenging to pick the sectors and moreover the specific stocks from those sectors. This presentation is going to launch is expected for a duration of about 40 minutes, and this will be followed by question and answer session. So let's begin. Many times we get a request from our viewers, from our subscribers, from our well-wishers that they want to see the past webinars. So on our website, there is a facility to watch all the past webinars posted so far. And for that, you have to visit our website, www.smartvrc.com. This is smartvrc.com. And on that, there is on the top horizontal menu, there is a link with the name of Smart Academy. Under that, there is a Smart Insights. And then you have got an access to all the past webinars. You can even select the category, what kind of topic you are interested in, and then you can watch here that webinar. So today's content would be performance based on sector indices, based on market capitalization, based on exports, and very sector specific valuations. So to start with sector indices. So before that, there is a poll. Which sector index performed the best during the last 1 year? So whether it was IT, that is information technology, or power sector, or auto, or FMCG. So you have to show your, as per your knowledge, as per your understanding, which sector has performed the best during last 1 year. Right. So 69% of the participants have indicated their preference. In next 5 seconds, we shall close this poll. Well, very interesting. It is going to be very interesting. Let's see how many of you have predicted well. So it is on your screen. IT sector 31%, power sector 29%, auto sector 34%, and FMCG 6%. So soon we shall see how the indices have performed. So this is during last 1 year. What has happened? IT, 31% voted for IT. Unfortunately, during last 1 year, information technology sector is down by about 13.43% and one of the biggest losers. In fact, among these indices, this was the biggest loser, followed by healthcare by 13.28%. And the winner was power sector with 76.55%. The other good performers were auto sector and capital goods sector 33%, and rest of them, as usual, FMCG was 7.8%, finance 0.61%, telecom 11.74%, BankX 8.14%, so metals -6%, then realty 17.46% positive returns, and then technology -9%. Now, if those who are interested in knowing the stocks under these indices, they can very well visit BSC website there, because these are all S&P BSC indices, and from there you can find out what are the constituents of these sectors. Well, this was all about the sector indices. Now we come to the market capitalization. So again, another poll, which index has performed the worst during the last 1 year? So this time the options are S&P BSC small cap or Sensex or large cap or mid cap. I hope you are able to see the options available on your screen. So you have to indicate which index has performed the worst. I'm not asking you for the best. It is the worst during the last 1 year. I request all the participants to participate. There is nothing who is wrong or who is right, because what matters is what stocks are right in your portfolio. It is not the market cap. So 76% of the participants have shown their preference. So we are closing in 5 seconds. Right. Total 78% participants have participated, and these are the results. I hope you are able to see on your screen. So 43% believe that the large cap has performed the worst, 32% small cap, the second worst, and Sensex, the third, and mid cap, the fourth. So let's see how near you are to your knowledge, or what I can say, to your expectations. So during last 1 year, there is very close competition among the small cap, mid cap, and large cap. And the worst performer is Sensex with only 3.42% gains during last 1 year. All right. And then the top performer is small cap with 6.47%, mid cap 6.18%, large cap 5.42%. So this was all about the indices, large cap, mid cap, and small cap. Thanks for casting your vote for the polls. So we are coming to the next is performance as far as the exports are concerned. So if you have the stocks in your portfolio which have substantial exposure to the export markets, then you should be very cautious depending on which company you have. Like in IT, most of the IT companies have big exposure to US market, and there is a slowdown in US, and their central bank is not happy with the high inflation. So they are going to keep on raising the interest rates. And USA accounts for total 24% GDP of the total world GDP. So quarter of the GDP is accounted for USA, another quarter to the Europe. China accounts for 15%. So these are the countries which are facing slowdown: USA, Europe, China, and in Japan. So you add up all these, this comes to about 70%. Also, there are other countries which are covered under rest of the world, which are passing through severe slowdown. So be very cautious what kind of company stock you have, what kind of company exports, and to which countries, because most of the countries are passing through slowdown, even China and USA. We all know Europe is also facing very high inflation, and now the rise in gas prices and all those things. So be very, very careful. Search and look for all the stocks in your portfolio who have got what kind of exposure. Now, the next is the sector specific valuations. So coming to the sector specific valuations, we have auto and related, This is in smart VERC's opinion. All right. This is not for the future valuations. This is for the present valuation. We believe the auto and related valuations are moderate, means it's okay, neither too high nor too low in the domestic market. But for the exports, still there are a couple of companies which have got good exports exposure, but are available at attractive valuations. When I say attractive valuations, means considering the slowdown in export market, still they are attractively priced. Then coming to the agrochemicals, before moving to the agrochemicals, I would like to share that in auto and related, when I say related, means the auto ancillaries, and in auto ancillaries, there is good potential in a couple of companies. And with the shortage of semiconductor chips coming to almost to near end for the Indian companies, the Indian companies are auto and related companies are expected to deliver very good results for the current quarter as well as for the next quarter. But thereafter, it all depends how the things move. Agrochemicals, it is moderate. Banks are moderately priced. Cables are, some are moderately priced and some are undervalued. Yes, we will see why I am saying that cables are undervalued. Cement, most of the stocks are highly valued. Chemicals, it is moderate in general, but for very specialty chemicals, I would like to add that the companies have reported very good results for the recently concluded quarter. And if we go by the growth rates, the P ratios are still attractive. Construction, there are a couple of good construction companies, and we have already recommended these construction companies stocks to our subscribers. Defense, it is moderate. FMCG, as usual, most of the time it is high. Hotel companies are being trading at very high valuations, probably because investors are looking for the recently concluded quarter results. But when we compare this with the last year, definitely you will find them attractive because of the low base, plus because of the urge of the people to visit places, because they were at home for last 2 years due to COVID. Now they want to go out and travel. IT, it is a little high, valuations are a little high. Infrastructure and power, it is moderate. Metals, it is high. Yes, metal stocks are ruling at high valuations, and this also we are going to cover. NBFC, it is moderate. Packaging, it is moderate. Packaging companies are reporting very good results. Paints is moderate to high. Paper, it is high. Be very careful, because again, the same thing with the paper as with the hotels. Of course, there is some added advantage to the paper in terms of the raw material. Coming to the pharma, it is moderate, and some of the companies have started putting at attractive valuations. Real estate, it is moderate. Sugar, yes, the valuations are high. Be very careful. And technology, it is moderate. So this was our opinion regarding the sector-wise prospects. Coming to the steel, this is with regard to the steel prices during last 1 year. Steel prices, commodity prices for last 1 year, how they have moved. And the source of this information, and also for the subsequent charts for the commodity prices, is tradingeconomics.com. You can also visit. And these prices are in Chinese yuan per ton. And as you can see, at international level, the prices have come down from almost 6,000 to 4,000. This can have a very significant impact on the company's profitability engaged in producing steel. But before that, you should also consider the raw material prices, that is the iron ore prices. Now, this one is in US dollar per ton. It hardly matters whether it is US dollar per ton or US dollar per pounds or Chinese yuan per ton or per pound. What matters is the percentage change. That is the most important. So As recent, just about 5 months back, the iron ore prices were 160 and now they have come down to 110. This is a significant 30% correction in iron ore prices, and this will benefit the steel companies. But at the same time, steel prices are dependent on international prices, and internationally there is a severe slowdown. Especially, I am very much concerned about the Chinese slowdown, because it is not only the big producer of steel, but also the big consumer of steel. Copper, this is very interesting. As you can see, the copper prices are down from about 4.8 to 3.7. So this is about 25% down. 25% is a big correction. And this should be beneficial for, we'll come to that. Then aluminum also the same way, almost 25% correction. More than 25% from 3,800 to 2,500. And then comes the aluminum. Aluminum is way down from a peak of 14,000 to about a little under 7,000. So may I ask you, which is the sector which uses most of these commodities like aluminum, copper, so mainly copper, aluminum, and PVC. PVC we are missing. PVC prices are also down. So which are the companies, which is the sector rather, which uses, whose raw material is PVC, copper, aluminum? Can you write in the chat box? So auto, I'm reading from the chat box. Auto, cable, infra, EV, auto, infra, construction, right? Infra, cable, auto ancillary, electronics. Yes, all are right. But like in real estate, there are other raw materials also, like cement, and there are many other, sand, and there are many other things, paints. But the companies which are basically dependent on aluminum, copper, and PVC are the cable manufacturers. So, and that is the reason why, if you look for the recently declared results, you will find that the cable manufacturers have posted very good results. So we are taking a small pause. This is something about smart VRC or form, and what we do. Our objective is basically to help investors create wealth from stocks, and this we do it in various forms. And the success, I mean to say, I can't say the success. What I mean to say is our expertise is indicated by the smart billionaire picks with respect to the other indices. And this is, as you all know, SBP was started on 1st of May, 30th of May 2001 with 1 rupee, 1 lakh. And as on 23rd August, its value was 137.77 lakhs. That means 1 crore. Starting with 1 lakh, 21 years back, and today it is 1 crore 37 lakhs. Had you invested the same amount in BSE Sensex, then the value must have been about 16.12 lakhs. In NSC, 15.31 lakhs. In Berkshire Hathaway, that is the company owned by Warren Buffett and Charlie Munger, 6.1 lakh must have turned to 6.41 lakh. Of course, it is not 1:1 comparable because the returns in USA cannot be compared 1:1 basis with the returns in India or any emerging market. And then we have, with respect to Nasdaq 1 lakh rupees must have turned to 5.76 lakhs. And you will be surprised to know that had you invested in China, then 1 lakh investment must have turned to around 1.5 lakhs only, 50% returns in 21 years. So now you can very well appreciate the Indian markets, how Indian markets have given 10 times returns, more than 10 times returns compared to Chinese market, and how Smart Billionaire Picks has performed wonderfully well compared to all other indices. And there are reasons for that. This SBP is a mix of small cap, large cap, as well as mid cap. Also, sector-wise, it is pretty diversified. Of course, it has about 17, 18 stocks only at any point of time. And 75% of these stocks are growth category stocks, and the rest 25% are value stocks. So, we at Smart VRC share knowledge and wisdom and provide advice via website, mobile app, webinars, seminars, workshops, social media, as well as television. So we have got wide range of activities and wide media through which we communicate, through which we share our knowledge and wisdom with investors. What activities we perform is the stock advisory. That we have 3 products: Smart Gains, Multibaggers, and Smart SIP. Smart Insights Pro. These are very selected videos which we have prepared for the investors' knowledge, where we have not only shared the knowledge but also our wisdom. Wisdom is very important in stock market because learning from the market takes a long time, and those small videos in a group of about 15 to 18 videos have been grouped under financial freedom, equity research, portfolio management, and controlling emotions. Each of this category has about 15 to 18 videos with a duration of about 17 to 18 minutes each. Yes, I am an author of the book Way to Billionaire. This is available in English as well as Gujarati. You can purchase from our website. We have got financial freedom calculators, which are freely available to all investors. So don't forget to visit our website, smartvrc.com. How we are different from other advisors. Not only different, how we are, I can say, we are better also in many ways. We have got a cumulative experience of 71 years, very rare to find. We have the ability to find the worth of the stock with good accuracy. Without knowing the worth of the stock, whatever you are doing is just you are playing in dark. Investors may gain as long as the market moves in one direction, but over a long term, without knowing the worth of the stock, it is very, very difficult, almost I can say impossible, to create good amount of wealth. Yes, we are truly qualified, not only in terms of the qualification, academic qualification, but also in terms of the wisdom, in terms of the performance. All our advice is closed loop. When I say closed loop, that means every buy advice is supported with a sell advice too. And also we provide the weightage allocation for each stock in your portfolio, because that plays a very crucial role in deciding your total returns. What investors should bother about is the total returns. Individual stock may perform very well, but if you have got only 0.5% weightage in your portfolio, then it's of almost no use. All advices during market is at ruling prices. And then unparalleled and proven performance, 26% CAGR in SBP from last 22 years. As I showed you, the compound returns are hovering around 26% CAGR from long time. So this was all about the Smart VRC. Coming to the smart world, financial parameters talk with each other. Yes, these financial parameters, when I say financial parameters, means the sales, the depreciation, the interest, the dividend, the equity capital, all these parameters, they talk, they interact with each other. You have to find what is the talk, what is the outcome you are going to see in times to come. Of course, added with the management also. And you have to pick the best 16 to 18 stories, and those stories you have to keep in your portfolio. And believe me, in the long term, you are going to be a winner. And one of those stories we have covered in this smart report. This smart report was launched on 19th of August. Stock is already up by 10%. This is a single stock supported with research report. Share price is between 3,200 to 4,000. It is a small cap, very strong fundamentals and very strong story. Its P ratio is low compared to peers and much higher growth rate compared to peers. That is the beauty of the valuations. We are targeting 100% returns with medium risk in about little less than 3 years. And subscription price is 1180. Those who wish to subscribe can visit our website, and under products, you will find a link with the name of Smart Report. And it is not only this Smart Report, and we also use the same technique to find the stories in various products and services, and the results are here for you to see. For smart gains, these were the stocks, and these were the advised dates, these were the advised prices, and these are the current prices, and you can see the returns, kind of returns we have got. Of course, our target price was much lower, but what the message I want to convey to you is, if you have selected the right stock, then you need not bother about the volatility in share price. You have to stick with it, and even if you sell it, if you hold for a long time, you are going to get very good returns, provided you are able to monitor the story, you are able to track the story. Story should not fade. Similar kind of returns from smart multibaggers within, and this for the best of 2020. That means about 1.5 years to 2 years. The fantastic returns from Equity, KEI, Industry, Caprians, Indian Hotels, and Happiest Minds. These are not a buy or sell recommendation, but these are our past advices. So if you are also interested in creating wealth, then we are ready to share our free wisdom with you via WhatsApp groups we have formed, and you can send your name and city at this WhatsApp number, that is 9755920780. So now we are heading for question and answer session. Thank you. Yeah, if you have any question, you can raise your hand through the reaction button, or you can write in the chat box also. So there is a query that in the year 2020, there was a recommendation from a top brokerage firm about Ujjivan Finance stock, which is similar to HDFC and HDFC Bank storyline. How confident we are fundamentally that HDFC may not end up like Ujjivan? Okay, so whoever has advised this Ujjivan Finance, they must have looked at the story, and I do not know who has advised, but maybe they might have asked you to exit also at the appropriate time. Because of the COVID, there were a lot of disruptions. Whether HDFC or HDFC Bank will also go the same way, you never know. But looking at the history, HDFC as well as HDFC Bank, they have recorded tremendous growth during last more than 20 years. So that way they have significant resilience compared to the smaller finance companies. And as I said, there is nothing permanent. What was good 10 years ago, 20 years ago may not remain good today. So you have to keep watching the story. How about textile industry valuation? Okay, textile industry in general is doing okay, but in the export markets, due to the PLI scheme as well as the demand from US and Europe, couple of companies are doing exceptionally well. But at the same time, with the recent slowdown in Europe, you should be very cautious. And if you are investing in export-based textile company, then you have to watch very regularly the developments in that company. And this watch can be done via call transcripts, via annual reports, via management commentary after every quarterly results. So these are the ways. Also, you can look for the company presentation. There you get a reasonably good hint what is going to come. If interest rates will hike by RBI in our country, then what will be impact on our stock market for next 1 or 2 year period? See, in the long term, there is 100% correlation between the company's earnings and the share price. So you always look for long term. If your company has low level of debt, then you need not have to worry about it. Markets may come down if the interest rates are much higher than the expectation, but that gives you an opportunity to accumulate more of your company rather than exiting or getting worried. What are the EV stocks, how they are? It is at a very nascent stage. It is really very difficult and to pick the winners at this stage. So it would be better to stay away from the OEMs, but you can bet on the auto ancillaries. Auto ancillaries which are supplying the cables, which are supplying the mirrors, which are supplying the lamps to these companies. Yes, Mr. Mohit, kindly unmute yourself.
Thank you, Mr. Asnani. Thanks for a nice presentation. I wanted to understand, as you mentioned, that we are seeing there's a slowdown that is going to come in US and Europe, which is, I would say, 50% of the world GDP. Yeah. So can we have an estimate, as the markets are always forward-looking, can we have an estimate by when this situation is going to last and how it is going to improve? When is it going to improve?
Okay. Honestly speaking, I don't believe in predicting the economic direction, not only for India, but for any of the world economies. And I strongly believe that no one can. It is very difficult. And moreover, the factors which are contributing this slowdown are totally unpredictable. One of the key factors recently, which the Europe is facing, is the very critical situation, is the availability of the gas. So this you cannot predict when this problem will be sorted out, when Russia-Ukraine war will end. There are many things. So it is better not to try to predict what will happen and how long it will happen. The best part is how your company will be impacted. That is more important. Whether your company has an export to Europe, if yes, to what kind of exports they are, and to which countries they are, like that.
So that even we can look at management transcripts and get to know what they are doing about how to handle this.
Yes. Also, the results also speak the language, which we must understand what is happening over there.
Sure, sir. Thank you so much.
Yeah, thank you. So Yes Bank for 5 to 10 years. Sorry, we don't discuss stock wise. And regarding the Yes Bank, it is very, in general, it is not only Yes Bank, but in general, the companies whose profitability has been impacted significantly, maybe because of any reason, it becomes very, very difficult for that company to bounce back to the previous levels. To my knowledge, I have not seen any such company which bounce back to the original levels. So for Yes Bank also, there are a lot of NPAs, lot of assets which they need to sell, of course, with a big haircut, and it will take a long time. As per reports, Adani Group having very high loan debt burden, it's second highest in Asia, but last 2 years, Adani Group is very fantastic return to investors. So you must always look at the story. As I said, don't look at the price. Price has to follow the performance. So, and moreover, we have not recommended any of the Adani stocks from last many, many years. We have not recommended any of the stocks. So this was all about the today's webinar. We have come to the end. I thank all of you for sparing your valuable time and coming to listen, not only listen, but sharing your views and asking the questions. Thank you very much.